Hi everyone, welcome to Value. So today we're going to talk about Netflix, and just to save all your time, because I know you've seen this by now, that Netflix lost 200,000 subscribers, first decline in a decade, and basically it's caused their share price to fall dramatically in the pre-market, looking around 28%, which is insane because this used to be one of the market darlings. Now it's like market trash because everyone doesn't want it. At least not the current valuation at $348 of the price tag, $154 billion. And mind you, it's fallen quite a bit since then. Like the peak was like $682, which is insane. And then, to watch it fall to like 348, it's kind of one of those situations where is the bargain? Because at 348, Bill Ackman thought this was a bargain, and he brought $1 billion worth of stock. He's not probably not a happy guy today, watching the pre-market around negative 28%, which puts it around $251. So overall, what's happened? The company's lost subscribers, 200,000. But that's not the only news. In the second quarter, they're forecasting to lose 2 million subscribers. So you can start to see that decline, that this is no longer a growth company, at least not the current stages. But based on what they put out, it doesn't seem like they feel like they can grow, at least not without kind of gouging the customer base that they have right now. Because right now they go, oh, we've got 220 million people watching, but we think another 100 million households are actually kind of not paying enough, because they're kind of leeching off the other 200 million. And I mean, I would take that off a grain of salt, because they have plans where you can actually share the screens. You can share the amount of users, and some people actually get the membership and then they share it with someone else, so they both pay half each or something like that. Like I know people who have done those arrangements before just to lower the costs, and I mean, they're legitimately, for them, I think if the cost base was any higher, if they couldn't split that membership cost, they probably wouldn't keep it. And these days, with so much other streaming platforms around, then it's a big question of would they keep Netflix anyway, because some people might prefer Disney, some might prefer Hulu or HBO, and we're at that situation. And also Amazon Prime, their members just get it free, and Amazon's producing some really good TV shows as well. And so these days we're probably at the peak where there's so many TV shows we don't actually have enough time to watch them. Like there's so many TV shows on my list to watch that I don't have enough time to watch them, and that starts to make me think, do I need these memberships? Because I don't have enough time to watch it because there's so much content, and hence the problem that Netflix is no longer a competitive platform that has a strong moat. It's one of those platforms that relies on that one hit kind of TV show to engage a mass amount of consumers and then get them to subscribe. But currently they don't have really too many big hits yet. Occasionally they do, and it works out. But the thing is, Disney's been putting out quite a few good hits as well. Amazon Prime is as well. So these days everyone's putting out some amazing TV shows. It's really the golden age of TV shows, and that's kind of put it in a situation where where do we put Netflix? Well, it's no longer a growth company, so it starts becoming kind of like a value play for more of a dividend kind of company. Like I don't think they wanted to pivot to that end yet, but it looks like they're going to be valued around that end. And the biggest question is, what would they be valued at if it stops becoming a growth company? In my case, since they're generating around $5 billion in profit, I would probably put the valuation of around $75 billion, which isn't a nice valuation for the current situation. It would mean they would have to halve the current price from $348 to around $175. So the thing is, me personally, I wouldn't touch it with a pole unless it was close to 175. As much as 250 looks really appealing, you got to ask yourself, what's the question? What's there left in this company that can turn it around, that stops like subscribers from changing? Like, I mean, I think they had plenty of time to kind of change the model and add stuff to the business, but they haven't. And the business itself, it seems to have run out of ideas. I mean, if their next idea is, let's start giving free memberships, except charge by using an ad revenue model, then they are well and truly out of ideas. Or if their next pivot was, hey, 200 million people have memberships with us, but another 100 million are leeching off that 200 million. And so if we can try to monetize that extra 100 million, then, it's going to work out. But I'm like, really? Is it going to? And I don't think I think it's them really, really scraping the barrel of that, which isn't promising, because after, even if you could scrape that barrel of like that extra $1 or $2, then like there's something else, then you're truly out of ideas. And that's a problem I think I have with Netflix, that their management team has kind of lost its creativity and it's not pivoting towards a new industry. Like, it's kind of weird that, like, they had plenty of time, they had the money as well, and they didn't pivot to another area, particularly when they saw so much competition coming in. But I think that's just the reality we're in right now, and we just have to recognize it and go, is Netflix something that's worth getting into now? I don't think at this current price. I think when it's, 175, that might be some justification for taking that risk. But at the current valuation, I don't know if I can justify that risk. Like, for me personally, I wouldn't justify that risk. But maybe you do. And I'd be very interested to hear your thoughts on why you would justify this as a good investment, or maybe you don't want to. And let me know your thoughts. But overall, I don't think you really have to see much financials to know that, hey, the main appeal of this company was the streaming, and there's a lot of competition. The other appeal was it was a growing company. Now it's not. So now it's just one of those companies that you would kind of treat as kind of like a blue chip stable type company. That will generate some steady revenues and some steady net profits, but it's not going to grow them in crazy ways that makes it appealing for a lot of growth investors. And a lot of people holding the stock are probably growth investors, hence why a lot of people are trying to get out now, because they're like, this is no longer a growth stock. It's not even worth 150 billion right now. It's probably worth, below 100 billion, which is going to be pretty insane, and I think it's gonna hurt if for a lot of people that were holding the stock at 348. Mind you, the stock went up 3.18%, so you can kind of see, like, the expectations were there for them to perform well, but they obviously have not. So yeah, it's a tough one. But I think in the absence of certainty, I don't think you want to get into something like this, because it's on a decline. You would get into it if you felt like there was new ideas around where they would turn the stock around, or where the stock was selling so cheaply that you thought the risk was worth it. And for me, that would have to be around $175. But apart from that, like poor Netflix. But also, you got to be worried, because if other big tech companies also start doing this, it's not a good look for the market. It's not good confidence either, because Netflix is one of those stable ones. If they, like, Apple or Google or Microsoft starts underperforming, then yeah, like the market's not going to fare very well. It relies on these big stocks to kind of boost up the confidence. And yeah, like if these valuation metrics start having cracks in them because people lose confidence in their ability to perform, then it starts to look really, really bad, and the market could be, it could have another massive re-rating where it just corrects to a lower level. So this isn't just Netflix itself in a sense. It's kind of showing wider cracks in the market potentially. That I think we can justify why Netflix is falling. We saw the competition like far away. I'm surprised if Netflix didn't see it. I'm sure they did see it, but I'm surprised they didn't do anything special to kind of counter that. Maybe they thought, we produce so much content, why would people not want to watch it? So yeah, like it's never a boring day on a market, which makes it why being a stock investor can always be so interesting. Alright, well, I'll leave you there. Until then, good luck investing, everyone.